Hey, what's up, guys? Gonna do a daily review and a little market update today. Price action was kind of good today, so thought I'd just give some commentary on it. This right here, we have the daily chart on ES. You'll notice that we are on the continuous chart up here, and that is because we're reaching some levels that are, so far back, these all-time high levels, that the current March futures contract doesn't give data that far back. Those levels that I'm talking about are way over here. So this is the January high of 2022. It's also the all-time high for the S&P. So you can see it here a little better on the weekly. Came up. That was also, we've also completed our quarterly shift objectives, which on the last contract it was really this high. There was a little bit of that discrepancy between, the contracts. When you switch over, the continuous contract jumped a lot. You'll see a gap somewhere around here. But we've reached our objectives for the quarterly shift to the upside. So going to the daily, you can see this big retracement here yesterday. So it makes sense that we get that down close candle right after we take, remember this green line is that high, right after we take that high, we engaged all that liquidity. So all the people, all the large funds, anybody who had sell stops at that all-time high, thinking it was going to be, resistance, because there's not any level above to put a sell stop. So clearly there's going to be a very large pool of liquidity at that high. Once we trade above it on this day and then open on, so we trade above it on Tuesday, open above it on Wednesday, and we're just engaging all that liquidity. And then, that liquidity was the target. It's been the target for a while, but as you can see, when the contract month rolled over, we had this gap, and then it really ran for that liquidity. And then it finally had the chance to reject. So ran for that liquidity, engaged it all, and then pulled back. You can see here on Tuesday, we came back, entered into this daily fair value gap right here. So that's kind of our little update just on the week and where we're at in the market. I'm going to now go kind of into the daily and just talk about today's daily price action. Again, if you haven't watched my previous videos, I am, doing my winter break or my Christmas break of trading. I suggest most people should be doing that. It's very common for, I think, most successful traders will be taking time off the last 2 weeks into December, first 2 weeks of January. It's just very common. You'll see some people say that the volume is low. In terms of smart money concepts and liquidity, we just, say the algorithm, it's less probable time. Okay, dropping into the 4 hour, we came up, engaged all that liquidity, and then we had an aggressive break lower. You can see we actually broke and closed below this swing low, and then we closed our body below these bodies. So I'm really curious to see between now and like mid-January where this market ends, because I'm wondering if how fast we came up for this liquidity. Usually when price, ICT said this himself, when price reprices, when the market reprices to a level very quickly, it's because it wants to get to that institutional level to rebalance, and oftentimes before going where it really wants to go. So I can imagine that we repriced aggressively above this level because it really wanted to just put in that high and engage all that liquidity. I think, you might have heard a lot of people say, well, we shouldn't be at these levels. It's artificially inflated, whatever. I kind of agree with that, with, a lot of the global climate and economic climate that's been happening. I don't know if we should be at all-time highs. And if we are at all-time highs and we are going through such turmoil in our global conflicts and even, the economy, while inflation and fundamentals, the Fed is looking good because inflation is easing, we still have the largest gap in wealth ever. So again, not to get too much into fundamentals, but I want to see if this is now we're going to roll over. That's why I said all that. Okay, going into the hourly. Actually, let's go down to the 15-minute, and I'm going to show you this indicator. That's pretty cool. I've shown it, I think, one or two other times. I think if you go into the indicators and you type in ICTKZs, whoever did this did a great job. Great indicator. And what it does is it highlights the sessions, and gives you a better visualization. So in our last video, we kind of talked about in the core content month 8, I think. Let me see if I can pull up the diagram. There, ICT talks about, okay, I'm not going to pull it up, but he talks about the London session and what like a normal London open. And usually that is for when the CBDR is a very central bank dealers range is very small. So when the central bank dealers range is very large, this concept doesn't apply. And if it's large and Asia is small, it usually can apply, but it just didn't play out today. So you can see what happened today is we had this huge CBDR yesterday. Asia trended up. London also between midnight and 2 trended up and then continued trending up. And then what you can see as, I'm going to leave that there, New York came up. So we were really just retracing off of this really, really, really big high right here, or big drop right here. You can see if you draw a fib. No. Let's use the bodies. Fib, we retraced up to just shy, right above 50% of this drop in that morning New York session. So we came up into that New York session, and then you can see us start to retrace. So I have been watching the market. While I haven't been live streaming, and I'm not really trading, I'm not trading with any of my real money. I have been, I'm at my computer still most days, and I do have the market open. And when I do see some good setups, I have been taking them demo-wise, and I'm going to show you a few of them here. Again, these are all it's just hindsight demo trades. If you notice, I've been our live trading has been done on this account right here. We are in drawdown on that, but because I want that to be dedicated to live trading when I live stream, and I'm not doing that right now. I opened up this second account. This is just demo 2, and these are the trades today. Let's see, what's today? The 21st. So right here, these are all the trades for today, and I'll show you those. I'm going to go to the 15, and we'll go to the 3 chart view. And what I'll do is I'll show you I believe it was a silver bullet I took this morning. Okay, so here we have 8:30. Right at 8:30, we had GDP release. GDP came out, news driver, we ran up. I didn't really see anything. Again, what you'll notice is in that core content month 8, when ICT talks about, the London, the way London sets up, when you get the normal, like the really good London setups, you'll see a good setup around 8:30. But since we didn't really get that, since we didn't get that normal London delivery, I'm not gonna speak about this 8:30 price action. So at 8:30, New driver come up, came down. Now we have the 9:30 market open. So market opened right here, and we pushed up. Came up, didn't make that high. Came back down, and what we really did, I was watching this, and I expected this kind of sideways open because of how much we moved on the 15-minute overnight. So because we had such a large central bank dealers range, and then between the bottom of that central bank dealers range in London, we moved so much. That's one of those things, and ITT said this himself, when we move a lot overnight, expect consolidation in the New York 9 to 5. So we got that. We got consolidation, and I was really expecting that. So we got consolidation. And then once 10 o'clock hit, I said, okay, we're looking for the silver bullet now. Let's see if we can see something. So here on the 5-minute, kind of take this away. Notice here, right here on the 5-minute, this red line is the 10 o'clock hour. So at this point, I saw us retrace going into 9:30, and then I saw we made this swing low on the 5-minute, and then we opened at 9:30, came up, but we couldn't continue. So I noted that, and I said, I liked this as a retracement to go higher. So if we break below this 5-minute swing low, that would negate my idea that this was a retracement to send price and continue higher above this high. If on the 5-minute we made a shift below the swing low, I'd be interested in this sell side, because you can see it's pretty even, and I'd be interested in this sell side again. Remember, on the 15-minute, on the hourly, and the 4-hour, we just had this significant drop off, cleaning up all the sell side and shifting market structure. So if this was a market structure shift to go lower, then this could all be just a retracement to get, again, remember, we right at this high at 9:30, crossed over the premium threshold, the 50% from this high to that low. Then we retraced, came up, failed to get above that high again. So now I'm thinking, okay, on the higher time frame, we're going to go lower. And I want to wait until I see this 5-minute swing low broken. It's also a 15-minute swing. It's not super clear, but that is a swing low on the 15 minutes. But I want to wait for it on the 5. And as you can see, right at 10, we came down. Right at 10, we didn't break below it. We shifted market structure on the 1 minute, but I was really just waiting for the 5. And it's funny, side note, this account, I've taken way less trades on it, and we're doing a lot better than the live stream account, which is down just as much as this is up. But it just kind of goes to show that that's because I just have the market open on my computer while I'm doing other stuff. So if the market isn't giving me anything, I'm not really paying too close attention to it. My attention gets drawn to it once I see a setup. So it's kind of like on that other account, because we've been live streaming, I have been getting caught up in just, trying to push and trade when setups aren't there. Whereas on this demo account that I'm just kind of taking demo trades, while I'm in this off period, I only really push the button when like something catches my eye, which is the way we should be trading. But again, once the new year comes, I'm gonna start up the live streaming again and try and make this live stream account a little more representative of how I regularly trade. Anyways, so right here, we trade back up. Right here, we entered that fair value gap. So you could call this the silver bullet right here, and then we broke lower. But again, I was waiting for this 5-minute swing low to break, so you didn't get that until after this. So we broke lower. Ignore this for right now. That'll come into context later. So we broke lower. And then when we broke lower this aggressively, I was looking to enter on either this fair value gap right here or this fair value gap right here. And I'm going to turn my executions on in a second, and you'll see that I did enter to go short up here. And then I put my stop up here. And when we came down and then came aggressively above this and closed above it, I was thinking in my head, okay, well, we just swept out a bunch of sell side, and we haven't really had much buy side taken since this 830 run. Came down, came up, but we've had a lot of buy side. And just the way it aggressively dropped, usually, remember, price, I said when price reprices really quickly, it wants to get to a level to book there and then continue, usually in another direction. So we came really, really quickly down here. And I was thinking in my head, we're either going to come up, retrace to this, and then continue lower because it's going to really want to get lower. Or if we blow right up through it, it just came down here to knock out this sell side. And what it really did was tap into this 5-minute order block, these two down close candles, this swing low, swept this liquidity, and then restructured up. So this was a change in the state of delivery before sending it higher. This change in the state of delivery swept liquidity below this swing low, and then it repriced, shifted market structure. So we came down, and I liked this as an order block. So I was watching that, and when we repriced aggressively through this fair value gap and closed above it, I was like, okay, it just came down here to hit this level. And what this turns into is a balanced price range. So when I turn my executions on, you'll see, but I came here, I entered short here when it entered this fair value gap, but then when it closed above it, I flipped that position. And well, I waited for this. What I did was I said, okay, I'm going to use that as an inversion. And we came down on this, and I entered long here, and we sold up there. Turn on my executions so you can see. I entered short one right there. Then we came up right here. I entered 3. Entered 3 right there. And you can see I sell this 8. And what I was really doing was, it was, so I was in for 4, 1 plus 3. Then you sell 8. So I like sold 8, and then bought 8 for the buy on this wick. You can see these two, one right there, one right there. So that's where it reversed. So I'm entering for buys on this wick, and then we continued up. Then I sold 1 right at the top here. You can see it. See where this red arrow pops up. Where that red arrow is right at this high. And I sold 1 right there, which is this high. And I sold another one right there, which is on the 5-minute, 50% of this wick. So this wick, look where the bodies went, or the candles. They respected the consequent encroachment of this wick, because wicks are PD arrays. They are treated as gaps. And look at, we came, well, let me take the executions off. We came up, wicked right over that consequent encroachment. Body respected it. Came down, was just shy of it, and then we turned over. So then we turned over. At this point, when we were running up here, I'm thinking, okay, we're going to continue higher. So I mapped out these two fair value gaps to see if they would be used as support. And at this point, I wasn't looking for an entry because I already had bought on this wick and rode it higher. So we were in profit. So you can see these losses right here were me getting stopped out when I tried to enter short off this fair value gap. And then when this candle closed above it, I was like, okay, we're going to use that as an inversion. So these losses right here, 1221, were me getting stopped out. And then you can see when I re-entered on that wick, these were my partials for the wick. So you can see they made up well for this loss. And then I was moved my stop to break even, or I moved it a little bit above break even, and then this came down. And I really was just waiting to watch to see if these got used as support. And then we ran through it. Again, I had my entry right around here. I had my stop loss right at the bottom of this candle right here, because we had 1, 2, this high, we had 3 PD arrays. So I liked the bottom of this candle, and we came right through it. I had this breaker here because I wanted to see if, again, on the 5 minute, it was going to be low, high, lower, low, break above it. So I wanted to see if this was going to act as a breaker when we closed above it, but it didn't. Price came back down. So again, silver bullet, you could say it was this right here. But in my personal opinion, so I had my fair value gap like this because, again, I was looking to go short on this. But then when we closed above it and we dipped down into this candle, in my head, I was mentally just noting this. So again, it was kind of tricky. It was both ways. They were both, like internal range liquidity. I like this one because I think this one was, I don't know, this was the one I traded. I think it was a little more obvious. I wouldn't have entered on this one just because I was waiting for the 5 minute break, but I think it was, some people might have entered on it, and I think that's something that somebody could have seen, not in hindsight, and actually executed on. So you kind of have, your choice: silver bullet to the downside, silver bullet to the upside. And then you could see we came down, respected this fair value gap here, came up, down, up. Again, remember, this was a balanced price range, so price was using it as support. Came up, and then we kind of closed that 10 o'clock hour just in this fair value gap. Going into 11 o'clock, you can see went sideways for a while, up until 11:30. And remember, we have that 11:50 macro. So again, we should be looking at what price is doing in the macro time frames and the specific time frames that ICT gave us. So 11:50 to 10:12 macro, you can see price moved. Wow, what a coincidence. Thank you, ICT. In terms of this sideways price action, you can see that on the 5 minute, it shows it well. We knocked out sell side here. We came up, knocked out some buy side there. So we really just kind of cleared up and down, and then we moved sideways. And then right before it decided to take this dive, what's the signature? 5 minute high. Came above, wicked above this 5 minute swing high in the 5 minute, wicked above it, came down, up, and then broke lower. So on the 5 minute, it was just the wick above, and then the shift in market structure. Came down. On the 15 minute, it was a lot of sideways price action, you can see. And then we rolled down, finally took out this sell side down here on the 15 minute, the pre-market sell side that we were targeting. Came down to the 15 minute. So on the 15 minute, we came down, took sell side below New York session, took sell side below London session, and then we took the sell side later below Asia. But again, as you can see, New York, remember, New York is often a continuation of London. So London was up, New York was up, London close was kind of sideways to down. But then when we break below this New York low, and London was up and New York was up, and we make this market structure shift on the 15 minute below New York low, they're pretty close on today's price, but you can say, okay, now let's target London low. So then you can see New York low, shift in market structure on the 15. We shifted on the 5, took New York low, took London low, and it would be fair to also target the Asian low because you would want to say, okay, it's going to be a down day today. So it came down here. This is right below when we took the London low. So remember, when we take certain levels of liquidity, price reached its target. So when price reached its target, it's like, okay, we're going to go sideways. So price goes sideways. This is the lunch hour, as you can see. So that's expected. ICT tells us that. And then going into, I'm going to take these off now. Going into, I'll clean this up too. So remember, we're just measuring the consequent encroachment of that wick for that turnaround point in the morning. Clean that up, that. Okay, so 2 o'clock here, 2 o'clock. So we're watching lunch. You can see us move sideways. I'm looking at the 5-minute. And when I see the 5-minute break right here, at first I said, okay, it's probably going to continue lower. But then we had this 5-minute break, an immediate pullback up. So this was like a turtle soup. And I'm glad that happened before 2, because now I get to say, okay, we just knocked out all the sell side liquidity under this consolidation. And on the 1-minute time frame, we can now classify that as a balanced price range. So we have this down close candle, immediate up close candle. Remember the paint roller analogy ICT uses. So we got a balanced price range right there. And I like that because then on the 5-minute and on the 1-minute, we shifted structure before 2. So see this swing high right here on the 5-minute? We shifted above that. So we knocked out sell side, shifted above that structure on the 5-minute before 2, and now I'm getting, okay, awesome. I think we're targeting buy side for the 2 p.m. silver bullet. Again, because we came, remember, where's the liquidity? Think, where's the liquidity? We took the London low liquidity. We took the New York low, the London low, and then right here on this drop down, let me pull this up again so you can see the Asian range. Sometimes it takes a while to load because it's kind of a lot that gets plotted. See this low right here, 5-minute low, 15-minute wick. Look, it comes and just dips right below the Asian range. So all it was doing was just knocking that liquidity below New York, London, Asian. So we took that and rejected up. So we took so much sell side liquidity, and I'm thinking, okay, buy side. It didn't want to continue. If this really is a balanced price range, it's not going to go lower. So I was watching it going into 2. Let's get a little more detailed on the 1-minute. Okay, so 2 o'clock right here. Two o'clock hits on the 1-minute, and I'm thinking, where are our fair value gaps? We had one right here. If I can get it, there we go. We had one right there, and we have one right here. And there was so much back and forth right here that I didn't want to search for any fair value gap below here. I'm treating this, again, this is the balanced price range really down here, but there was so much back and forth in here. I didn't expect it to come down lower. And you can see right here, if I hover over this on the 1-minute, but you look at the 5-minute, see that candle that vertical line is on? It's on the candle that made that a body close shifting market structure. So I want to look for fair value gaps inside of this price run, these 3 candles. There's no fair value gap on the 5-minute in these up close candles, but this is the price run that shifted market structure on the 5 and ran up. So I'm looking for fair value gaps in there. We have this one. You can see we reacted off of it. We really balanced it. So we came up, came down to the bottom of it, came up. Another fair value gap here. 2 o'clock hit, and I'm thinking, okay, what are we doing? So 2 o'clock happens. We come, tap into that, come down. But it actually, so came down into that, came up, came down, and then I'll take that away for a second just so it can get a little more clear. You can see we respected the silver bullet, or not silver bullet, the fair value gap right here. And I was correct on my assumption that it wouldn't go lower than this, because just look at the paint roll. Think of the paint roller analogy. So back and forth. Did I enter on there? Yes. See, I bought one here because when we came back down to this fair value gap, I thought, okay, I want to see us use that as support, and then if we shift and make a swing low, because we had all this run up here on the 1 minute, so I wanted a little deeper of a retracement. So, and I'm already up on the day here, so I enter light 1 and 2, whereas this morning I was entering a little heavier. We entered in here. We had this one body close below it, but then the next candle body opened inside of it, and then the next candle body opened above it, and then we shifted market structure right here. So what did I do? I highlighted this fair value gap, and I entered off it, on it, right there. See that little blue arrow pop up right there? I entered on it, but then we retraced, and I was really eyeing this one. So I entered this as an early entry in case price wanted to really run, but I held. We came back down, and I watched this candle body come really close down. Again, order block right here. Whoa, no, don't want to do that. Let's measure out this order block. Whether you want to use the wick or the body, we came down just to touch into it, and then see this candle body closed right above that fair value gap. We came down again, and what I was really doing here is I said, okay, so this is about, so we came down and already delivered sell side to this. So part of me was saying, I like what it did here. I wasn't going to immediately enter when we first came back into this because we already delivered this sell side. So it was kind of like a rebalanced, it looked like a rebalanced fair value gap. So I waited. I didn't want to enter immediately. I waited, saw the candle body respect it, and then I said, okay, now if these candle bodies respect this wick, I will enter again. And as you can see, the candle bodies respected wicks are gaps. The bodies respected the wick, consequent encroachment. So I entered one more right here. Came up, down, up. Then we ran up. I sold my first one right there. That red arrow is this high. Sold there. Then I moved my stop up because we engaged liquidity. So I moved my stop above break even. And I got stopped out right at the bottom of that. As you can see, it came down lower again, tapped in like IOFED'd into this silver bullet again, and then went higher. I was okay with not being a part of that. Again, I had my win this morning. I had a win to right here. I was fine. I was just happy with that. So got stopped out for some partial profits. Came back down on top of this silver bullet again. Came up higher, as you can see. Then it started using this fair value gap. Support, higher. Came down. Came up above that. I'll leave those on. Yeah, and on the 5 minute, it's moving pretty slow. It's kind of high resistance. I was once we took out on the 15 minute, when I saw us take all that liquidity from the New York, London, Asian session, I said, okay, I'll expect us to now actually come for these highs, because look at on the 15 minute. You can see it on the 5 minute too. There all these swing highs right here. There's just a lot of buy side here, buy side here, buy side here. So we had this consolidation, and I was thinking, okay, the reason I mapped out these specific fair value gaps was because was a 15-minute fair value gap with a 5-minute fair value gap inside of it. And I just wanted to watch price and kind of see how it used that. As you can see, we wicked above it, came down. Here's the balanced price range right here on the 1 minute. That's it on the 5-minute. Came down, touched the top of that balanced price range, and then came up and closed above that 5-minute fair value gap. So now we're closing above that 5-minute fair value gap. We're using it as support. And we closed above this 15-minute fair value gap. Came back, used it as support. And then the reason I had this as a breaker is I wanted to see how price responded to it, because when we closed low, we had this high, low, higher, high break on the hourly. So this candle right here, this black candle, down close candle, I want to see if that treated like an hourly breaker. I was pretty convinced that we were going up. As you can see, I traded up and through that breaker, but I just kind of wanted to map it out so I knew it was there. Remember, if what's more important, the most important thing is knowing what liquidity price is going for, which is why you heard me talk about how we took the New York, London, Asian sell side. So I'm expecting buy side now. And if price wants to reprice to buy side, because remember, you can find so many PD arrays, but it's not going to listen to those PD arrays if you are off sides. You want to be on sides. So since price at this time right now, end of 2 o'clock, going at 3, wanted buy side, it's going to disrespect this hourly breaker structure. So I went long because I prioritized my narrative around liquidity over just the fact that there's a breaker right here, which is why a lot of ICT students might get, a lot of us, we hit these roadblocks because we get excited about seeing the PD arrays, and we, in hindsight, can see price react off the PD arrays. And it's very easy to point to it in hindsight. And it really is a different animal once you are doing it in real time. Again, because you can find so many bearish PD arrays and reasons for price to want to turn around when it's in here. But if it wants buy side, it's going to disrespect all that narrative. So that's why the liquidity narrative is the top priority. And I told you why I thought we were going to go up. You can see I entered long there. And yeah, price came up, then price came back down. And again, this was just kind of, a product of high resistance. Came up, came all the way back down, took out this low. Found support on this 5-minute fair value gap. Again, I wasn't really looking to trade much because of how deeply we retraced after coming above this high. So let's watch the 5-minute as well. So we have this swing high. It's also a 5-minute swing high. Make this significant swing low, and we're kind of barcoding our way up and through these swing highs. And then finally, right after this swing low, we have some, decent price run right up here. Shift above market structure. So I'm thinking, okay, now it's going to finally go for all this buy side at once. And that's why I exited at the top of this and then moved my stop pretty high, because I thought it really should have kept running. And I knew if it retraced this deeply, then it's not low resistance conditions, it's high resistance conditions. And that's when I saw it retrace this deeply, I said, it's not invalid to think we're going up, but it's probably just going to deliver very sloppily, or seek and destroy. And as you can see, we came up, barcode up, took this high, but then we had this deep retracement, up, down, and then right in between that 350, that sweet spot that ICT has told us, 315 to 345, we had that run up, and finally, let's go to the 15 minutes to just get a bigger picture. We finally ran up and cleaned up all that buy side. Again, I was looking for it to happen within this 2 o'clock hour. If it was low resistance conditions, that probably could have panned out. but it didn't, and I moved my stop to break even, and I'm still profitable. So end of the day green on this. This random little account that I just started just to kind of demo trade while I'm in my Christmas off season is doing pretty well. So it's a nice, refreshing reminder because our live stream account we were doing pretty rough on that. But yeah, so that was priced today. NASDAQ shaped up pretty similarly. I'm not going to go into NASDAQ too much. So we closed the day up here. Let's go to the daily and see how we closed. So again, remember, came down, tapped into this daily inefficiency. And then we had this strong close. So what I'll be wanting to see in the next, I guess we only have one more day of this week, but in the future is if we break above this high, then I'm expecting this to be kind of like an order block. And it was a change in the state of delivery after we engaged this green line, all this all these buy side liquidity came back down, tapped into inefficiency, and now we'll continue higher. Again, remember, it wants to knock all these people out. So especially the longs, it wants to the breakout people. If we close above this high, people start going long, and then we have a day open and comes against them, taps into an inefficiency, and now we can continue higher if we do want to continue higher. Looking on the weekly, again, look, this has been one of the craziest weekly rallies ever. But I think by the time mid-January comes around, who knows? We could still be going up. We'll see when that time comes. Be careful. Don't try and trade too much in this time. Remember, it's just a low probability time to be trading in. So either demo trade, do whatever you got to do. Don't be risking now. And, the reason why, I haven't been that active on the YouTube channel is because, yes, we're in low probability conditions. So I'm not really going to make videos addressing, like, especially when we're in this consolidation. It's like it's not super, super worth my time when I'm just kind of making videos explaining to you how, reiterating we shouldn't be trading now, and prices just moving sideways. Again, this is the gap when the continuous contract rolled over from one contract to the other. In terms of this weekly structure, let's open this up. So these dashed lines, I believe, should be the weekly structure. So if we are gonna continue higher, what is this week providing? It's providing the weekly Wednesday reversal structure. I'll try and bring that up for you guys. So, weekly Wednesday reversal structure. This is in the core content month 7. Here's our 4-hour. We have these dashed lines dividing the week. So this is Sunday right here. I'm going to draw this out. Open. Sunday, Monday, open. Where's Tuesday? Wednesday. Ooh. Wednesday. Low. Into PD array. And then we continue Thursday into Friday. So let me blow up this structure for you. Look at this green area. So MWD, monthly, weekly, daily discount array. What is this? Daily for value gap. Thursday came up higher. So because we had such a strong close, I am expecting us to go up higher. If it doesn't do that, then we are probably in some type of seek and destroy condition. Again, I have all these little diagrams clipped, so the only other diagram that has a Wednesday low betting placed and doesn't go and take out that Tuesday high, the only diagram that does that is, sorry, it takes a little while to find these. Be patient with me. There we go. Seek and destroy. Bearish Friday. We continue looking to make sure. Yep. Okay. Well, there was my little market review. Hope you guys enjoyed it.